Hello everyone, my name is Leo and welcome to my first video in my credit card series. This one is entitled What is an APR? And that's what we're going to be going over today. So to get the basics out of the way, APR stands for annual percentage rate. Essentially, it is the interest you'll pay on a given balance on your credit card if you were to put that balance over a year period. Now, the way that your bank or your credit card issuer calculates this balance on a monthly basis, it's a little bit more complicated, but essentially they, divide it by 365 because that's the amount of days in the year. They multiply that by how many days are in the billing cycle and blah, blah, blah. That gives you what your interest that you pay on your credit card balance every month. Not really too important. You don't really have to worry about that. Long story short, the lower your interest rate, the better as far as credit cards are concerned. Now, the way that a APR is made up is there is two parts of it. You have your prime rate, which is the U.S. prime rate, which that's somewhere around 3.5%, and then you combine that with the rate that your credit card issuer gives you, let's say 15%. You add those both together, and that gives you what your APR is for a given credit card. So even though there's two types, there's a fixed APR and then a variable APR. Pretty self-explanatory what they are. Variable rates can change at any time. Fixed rates technically cannot be changed, but of course there's always caveats to that, but they are required to give you a specific notice time before they're allowed to do that. So the first one we're going to go over is the variable rate cards. Like I said, normally it's calculated by taking the prime rate, adding that to whatever rate that the creditor has decided that your risk is worth. We'll say 15%. You add that to your prime rate, which is at 3.5%. You're getting a Discover card. That gives you a combined rate of 18.5% interest that you'll be paying on your credit card every month if you hold the balance. Now you notice I said if you hold the balance, and this is the same for both fixed rate cards as well as variable rate cards. As long as you pay off the balance in full that you purchased on that card in that billing cycle in full every single month, no matter what your APR is, you will pay zero interest on that balance. And that's a really, really great thing. So if you make a purchase for $100 on the first of the month, you get the bill in that month, or you go online, you pay it off either on that due date or right before, whatever you're most comfortable with. And usually in my case, just to keep things easy and keep them simple, I just pay my entire balance of my credit card every single month on auto pay, because it just makes my life easier. And that way, almost all credit cards have what's called a grace period, where as long as you pay that balance within X days, usually around 30 days of getting it on, putting it on your credit card, you will pay zero interest on it. So you can have a 30% interest rate credit card and you actually don't pay that interest, which is awesome. And now if you have a rewards card like an Amex or a Discover or any of those, Capital One, Quicksilver, all those kind of cool cards with the 1.5% cash back, 5% cash back on Amazon, all that fun stuff, it's only going to be worth it if you pay that balance in full every single month. Otherwise, that APR that you're going to be paying on it is going to eat up any rewards points that you would have gotten otherwise. Now, even if you have a fixed rate card, and this applies to variable rate cards as well, if it's a significant change, the only caveat that I talked about earlier is if for whatever reason the U.S. prime rate changes, they are not required to give you any kind of notice that your rate will change, because like I said, it's in that calculation. So let's say the U.S. prime rate goes up 1% to 4.5%. Your interest rate on your Discover will suddenly be 19%. That the credit card issuer didn't change the rate. The U.S. prime rate did, so that changed their calculation on how it took your rate. So now you're going to be stuck with 19%. They are not required to give you notice on that. However, I think both for variable rate and non-variable rate cards, if they're going to make a significant credit change or a significant change in your account terms, which can apply to a lot of things, but in this case it's going to be to your interest rate, they are required to give you 45 days notice, and you should have the option to close your account if needed. Now, you don't have to pay your balance in full if you close your account. You can continue making payments like you normally have been, but now at the end of that, when that balance is fully paid off, they will close your account. And keep in mind, and we'll talk about this at another point, if it's an old credit card, it may not be worth it to close the account even if the interest rate goes really high, because the average age of your accounts, your credit card accounts, applies to and helps your credit score. So we'll talk about that in maybe a credit score video coming up. So they are required to give you 45 days notice. Now, there's a few places or a few ways they can change your interest rate without having to give you notice. Primarily, with the Credit Card Act that was enacted in 2009, or the new credit card laws, within the first year of you having your credit card, they should not be able to change your rate unless it was in some kind of introductory APR that had expired. So within 12 months, they should not change your rate at all. You can't go from a 15% to a 20% unless that 15% was part of some kind of introductory APR that was made, aware to you when you opened the account that it was only temporary. That's the only time they can really change it within that year. The other way they can change it is if you are over 60 days late on a payment. If you're overdue, you're past due on your account, they can apply what's called and put you on the penalty APR, which is usually astronomical compared to your regular APR. You're thinking, 30, 35, 40%, ridiculous numbers that you will hopefully never have to pay. Just please pay your account in full every month if you're going to be using credit cards the proper way, or the way that works best for you. Those are really the only two kinds of ways they can change it within that 1 year period of you owning the credit card. Any other time they change the rate or make a significant account change, they have to give you 45 days notice. If they don't, maybe you missed it in the mail. I'm pretty sure they're pretty good at it. But if you ever have any questions about credit cards, credit card companies, and why your terms change, all that kind of stuff, go ahead and give them a call. Most of the people you're going to deal with credit card companies are usually pretty good people. You can get on the chat with Discover or American Express or Capital One. I've dealt with each one of those a couple, at least a few times, and each time has been great. They either help me reduce my APR, they'll help me increase my credit limit. Just be honest with them, and everything will work out great. So if you see like a big increase or decrease in your, APR, just give them a call and see what happened. It could have been some introductory APR that had expired, or perhaps you didn't notice you were past due on account. I have done that, unfortunately, or at least a couple days late, where they hit me with some kind of fee. Not the best feeling in the world, but that's why I have everything on autopay now. So thank you guys for watching. Hopefully you got a good idea of kind of the basics of an APR, how it works. If you have any specific questions, feel free to leave a comment below. Or if I was wrong about anything, which is definitely a possibility, leave a comment below, let me know, or send me over a private message. Thumbs up if you liked the video, thumbs down if you disliked it. I'm hoping to, this is a new channel for me, so I'm hoping you guys like it. I'm going to try to keep everything as simple as possible, because I know when I was looking at getting my first credit cards, or my first loans and that kind of stuff, I was very confused. There's tons of great information out there, but a lot of it's not concise and it's kind of all over the place. So hopefully I can help you guys make your life a little bit easier. So thank you very much for watching, and I'll see you next time.